Hey guys, welcome back. Tonight's video is going to focus a little bit on the overreaction that we're seeing in the market. Because in my opinion, I think the price action we saw today in the memory sector was just a little bit of ridiculous. Because the earning prints that were dropped on the street yesterday were strong. SanDisk, they showed us a 372% revenue growth year over year with an 85% gross margin. And that stock fell by 7% today. Western Digital, they beat on revenue, they beat on earnings per share, gave strong guidance for the next quarter, and that stock was down by 13%. Now, Seagate, it decoupled from the group today. It actually grew by about 2%. It put $15 or $16 on the board for the share. So it's a great sign to see that stock moving. It's showing us that the market is continuing to value the storage sector and the storage super cycle that's going on right now. And then we saw Micron. It plunged down to about $827 a share right at the opening bell, but then support stepped in and it rallied the stock up to about $913, where it then just stayed and digested that level pretty much for the rest of the day. So we're going to cover all of that in today's video because I think the reality is we know that Wall Street sold the memory sector today. As I mentioned, we saw 4 of the 5 stocks down. The question we have to ask ourselves is, why does Wall Street think that we are seeing softness or potential cracks in this super cycle or this kind of memory and storage super cycle? Because all the signals we see in the market right now are showing us something completely different. So that's what we're going to cover in tonight's video. We'll go through the price action across the entire group. I'm going to show you the candle pattern charts for Micron and SanDisk to show you exactly where institutional support stepped in. I'm going to go through the bearish themes for SanDisk because there's 4 kind of big themes or questions out there based on their earnings print. And I want to address each and every one of them, cover them, and give you my perspective or my thoughts on each one of those themes. And then I want to give you 3 clear signals right now that are showing us that this market is as constrained as it has ever been. And finally, I'll give you something to look forward to next week. There's 2 big events that are happening on the 10th and the 13th that'll be clear catalysts for this sector. So make sure you hang on to the end of the video and you get those moments as well. But before we get started, give me a like and subscribe to the channel. Guys, it was great to see the growth last night with last night's video. I think we picked up almost 300 new subscribers. So thank you to everybody that watched the video, that enjoyed the content, and join the channel. Let's keep it going. If you haven't joined yet and you're seeing this video for the first time or this channel for the first time and you enjoy this video, make sure you subscribe. All right, let's get started, guys. Let's take a look at the action that we saw across the sector. So I want to pull up my watch list here on Market Watch. You guys probably know, I'll show you just because I think it's kind of interesting. I have them structured based on the constraints that I follow in the market. So we have the power wall, the infrastructure wall, the compute wall, the connectivity wall, and the memory wall. So we're going to look a bit at the memory wall today and show you how they performed. So on the left side will give us the action throughout the regular trading session, and the right is the after hours. We'll see that Micron was down. It finished down about 1.3% today, lost just under $12 a share. It actually rallied back really nicely. I'm going to show you that in the candle report. Same with SanDisk. Although it was down by just about 7% and $91, there was a lot of support that stepped in. It just stalled out right at that level there and kind of digested sideways through the day. Western Digital clearly had the most pressure today, down by 13%, $67 right now. And then we see Seagate was up about a little over $15, close to 2%. And SK Hynix, the ADR, was down by about 5% today, $7 off the stock. All highly, like in my opinion, all at great points right now. If you're looking for an entry point, again, do your own research. I'm not a financial analyst, but many of these stocks are priced at an unbelievable level where, you know, there could be some great upside for any of us investors if you're thinking about getting into the memory sector. Look at the after hours to the right. We're seeing positive movement right now. Micron is up by, $8.32. We see SanDisk up over $16, and the rest right now are trending green as well. We will continue to monitor those all through the night, and let's see if we can keep them green, keep that momentum moving as we get into the opening bell tomorrow. If I jump over to take a look at the price action, or at least the candle pattern charts, for Micron and SanDisk, I want to show you just the institutional support was there. So we can see, remember we had this flush at the end of the day yesterday. And I showed you how that dynamic was the same for all members of the Fab Five, or all members, at least I showed you 4 of the 5. It's interesting. Somebody made a comment last night that, is this Citadel offloading some of their shares? It's an interesting point, and it very well could be, but the dynamic was there. It was clear profit taking before the closing bell yesterday, leading into those prints. So that's the momentum we saw. Gap down Micron right at the first 5 minutes. It hit its intraday low, which was $8.27 a share, but then support rallied right back, and it got the stock up to its intraday high, which is right over here. I think intraday high here of about $9.13 a share. And then you could see it just essentially had a little pressure and then just kind of digested sideways for the rest of the day. It just kind of moved right in this price action between 880 and 900 throughout the day, and then finished with a little bit of a stall here in the last 5 minutes, gave up a bit. Overnight, we're seeing kind of right where we closed. Essentially, it's flat, so we'll keep our eye on that. But that is the institutional support. 913 appears to be the new kind of resistance wall or overhead resistance for the stock. So we're going to see tomorrow if we get some strong price action, if we get positive momentum, can we break through that 913 and start to gain back towards 920 and above for Micron? So that's one thing I want to look at tomorrow is the 913 kind of resistance level for Micron. If I look at SanDisk, again, same kind of action yesterday, a little bit of a gap down here. We see it gapped all the way down to a low of just 1163 right in the morning, but then strong support again, rallied all the way back up to about 1324 as a high throughout the day here. And then we kind of got into this sideways digestion, very similar to Micron. You just saw really tight candles all throughout the rest of the day. I actually thought we would see more support here. I actually thought we would see it drive right back up to where we closed yesterday. If you remember where we closed, right about 1350. I thought we would see more support that would push it up because that earnings print was strong. But it just digested, and right now we are sitting pretty much flat in the after hours as well. And I'll show you that. So right here, flat, 42 cents. It just flipped over to a negative 32 cents. So we'll keep our eye on this sentiment and this momentum overnight. We'll see what it looks like when we get to the opening bell tomorrow. And hopefully we can have a strong day with this sector and finish in the green before the end of the week. Let's see if we have any profit taking before we head off into the weekend. That's what I want to keep my eye on right now. We'll certainly can keep our eye on what's happening in the Asian markets overnight as well. And what signal does SK Hynix, Samsung, Kioxia, what do they give us about what momentum we may be able to see tomorrow morning at the opening bell? But let's address some of the themes that we saw, or at least I heard. I want to jump back to the earnings print that SanDisk dropped on the street yesterday, because there were probably about 4 key themes that I heard overnight as I was reading and kind of digesting a lot of the news. We know the earnings. I'll just remind you that I said it in the beginning, but $9 billion, 372 year over year. You know, looking at earnings per share of over $39, gross margin about 85%, and free cash flow of $5 billion. So the first piece I want to address is this line underneath. So there was some negative sentiment or negative comments that all of their growth is being driven right now by price action and not volume action overall. So that's creating a little bit of friction, I would say. Some of the critics are pointing that out. And I think for cyclical traders that are used to looking at legacy spot market pricing and crashes associated with that, this price-led growth that we see with SanDisk and the other players, it looks fragile. But we have to remember that today's market is completely different. This cycle is structurally different than the past. So this is a fundamental flawed critique, in my opinion, from the bears or just the critical analysts. SanDisk pricing gains, they're not unbacked spot market spikes. They are the result of a deliberate high-margin mix. Their shift towards enterprise data center SSDs and more fixed price floor contracts under these new business models that they outline. Guys, remember, they have a minimum contracted revenue of $94 billion with these new business models. The second piece that I heard critics mentioning was around their gross margin. The fact that their gross margin hit 85%, but when you look at the guidance, if I jump to the guidance, you'll see that they're guiding for a gross margin of roughly between 83 and 85% as well. So the critics are saying this is, it's stagnant, it's slowing down overall. and they're holding at this level. And this is kind of on paper, this is a peak cycle. But the fact that margins, when get flat, it's indicative of a peak cycle. But you got to remember one thing here. I think first off, when I saw that, I kind of chuckled because an 84 and 85% gross margin with a hardware player like memory is, and you look at it from an historical context, this is elite overall. And you got to remember also that their CEO mentioned with their new price contracts, they are locking in these agreements around the 80% margin floor. In fact, he made a comment that he thinks this is enough profit for the company. That is a fair price point for the company, but also for their customers as well. So they're locking them in at 80%. So expecting margins to endlessly expand quarter over quarter, it just ignores the reality that SanDisk is intentionally locking in historic multi-year profitability rather than chasing short-term pricing spikes. So again, in my opinion, that is a kind of flawed critique as well. The third claim is around their buyback. So we see here in the last bullet point, they're mentioning they've spent $4.5 billion in stock buybacks, and they're authorizing another $15.5 billion. Now, I actually, crazy enough, have heard some critiques. It's just not very impressive. And I think this kind of just completely ignores the balance sheet reality that we see with this market, because this company generated $5 billion in free cash flow this quarter. They're generating massive free cash flow right now, like all the memory companies are. And they have cleared their long-term debt. It's a very healthy company. They've expanded the liquidity. So SanDisk can easily fund buybacks entirely out of organic operational cash flow without compromising capital expenditure for their BiCS8 program, their BiCS10 tech ramps up, as well as their partnership with SK Hynix for high bandwidth flash. So to me, this is an incredibly strong sign. And I also think that any buyback like this just drives upward pressure for the stock price. And I think shareholders will be rewarded with this. And finally, the last piece, I'll jump back to the earnings, is just around the fact that they've guided for 10.3 to 10.8 billion, not hitting the whisper numbers that were in the market. The whisper number that drifted as high as, I think, 11.2 billion. So while missing, or apparently the critique is that they're missing this overextended whisper number, it created a bit of a short-term sentiment drag on the stock. And we saw it in the after hours. We saw it today. But guys, the fundamentals remain rock solid with this company when you go through the earnings report. The midpoint of that guidance still represents almost a 20% sequential top line increase quarter over quarter, and they're locking in a $44 to $46 earnings per share. So Wall Street isn't reacting to a breakdown in the AI storage demand. They are simply resetting the overextended buy-side expectations against a company that has, honestly, when I jump back to their new business earnings, this is the piece we have to remember. This is a company that has 1/2 of their bits committed under these contracts in fiscal year 2027, and 2/3 of the bits committed in fiscal year 2028. And remember, I'll repeat it again, they have $94 billion in minimum contracted revenue. So in my opinion, those 4 bearish critiques that I mentioned, they are just flawed critiques. SanDisk is fundamentally strong. It was a great print, and I think they will be rewarded in time. Let some of the selling and get a healthy reset with the stock, and I believe you will continue to see institutional support move this stock higher. But let's jump over and talk about the signals that we are seeing in the market, because I clearly told you there's 3 signals that I saw that I want to call out. This one is from Citibank. Citi says buy the pullback in memory stocks, says upcycle is still in early innings. So if we scroll through that, you can see the current AI-driven memory cycle remains in its early stages, according to Citi strategists, arguing that it could ultimately outperform the industry's last major upcycle between 2001 and 2007. And if you remember, that was a NAND upcycle, and it was driven by MP3 players and digital cameras. So what they're saying now is that Citi believes that the current cycle is likely to outperform the 01 through 07 upcycle, given that AI demand is driving both DRAM and NAND demand. They also pointed to customers signing these 3 to 5 year long-term agreements as evidence that the upcycle is persisting longer than initially expected. Citi highlighted that the persistent shortage in high bandwidth memory chips is expected to push AI chip makers to pivot from a scale up to a scale out approach, deploying a greater number of GPUs with lower HBM content per unit rather than concentrating capacity in fewer, more powerful chips. However, despite this decline in HBM content per GPU, the bank projects that total HBM capacity per AI system will surge 434% from 20.7 terabytes to 110.6 terabytes as GPU counts because GPU counts will expand from 72 to 576 per system. Now, SK Hynix, another great sign here. They indicated during their second quarter earnings that they were reviewing shareholder return options, and they're expected to announce a shareholder return program ahead of the third quarter increase. That'll definitely drive up the price action for that as well. And we know that Micron is going to do the same thing in December when they clear their restrictions in the market and they can buy back some of their shares as well. But this was clearly a strong signal for the sector. Even if they lower the HBM per GPUs, it's going to expand just based on the demand we see in the market. The second piece I wanted to get to, there's a couple kind of interesting signals. So this is directly in line with what I mentioned. It said, and I've seen this report, this is not new. NVIDIA is they're evaluating lower memory specs for the Rubin Ultra. We saw this a few weeks ago, maybe last month, that TrendForce is reporting it again, is that due to the DRAM shortage, that it will persist through 2027. NVIDIA has been evaluating alternative HBM configurations for its next generation Rubin Ultra platform. So their original HBM4E was a 12 high stack. That was the original design. But now it looks like they are monitoring 8 high as well as 12 high. And because they're doing this because TrendForce projects that HBM bit shipments will grow 50 to 60% year over year in 27, but it'll still fall significantly short of demand. And pricing power remains firmly with the suppliers, and substantial HBM price increases have become industry consensus, putting AI chip makers under dual pressure from reduced supply and availability of costs. So the piece we got to look at, or at least the way I look at it here, is I don't focus on whether one Rubin configuration carries fewer HBM gigabytes. I focus on why would they be considering multiple memory configurations in the first place? It's because the supply availability in the market is so constrained that it is forcing the world's most dominant AI accelerator company to think about how they can redesign their architecture to optimize it. And it's all being redesigned around memory. So the bottleneck hasn't disappeared in the marketplace. This is a sign that the constraint is as strong as ever, and the constraint will be there through 2027. It has become important enough to influence the entire system design now for a company like NVIDIA. That is another strong signal. And look at this one from Apple. Apple scrambles to secure DRAM as $1 billion worth of iPhone 18 chips reportedly await packaging. This was a fascinating story. It says that Apple and its manufacturing partners are rushing to secure mobile DRAM ahead of the expected launch of their iPhone 18 lineup, with about $1 billion worth of next-generation processors reportedly remain unable to move into packaging without sufficient memory supply. So with less than 6 weeks left until their anticipated debut of the iPhone 18, iPhone 18 Pro, Apple's first foldable iPhone, it's tentatively called the iPhone Ultra. Assemblers are pressing Micron, SK Hynix, and Samsung to accelerate the DRAM shipments. And the other piece that I found interesting is that this processor is expected to be packaged alongside the DRAM using TSMC's new wafer multi-chip module called the WMCM technology. And this process brings logic and memory together in a more integrated package. They describe it as kind of the mobile-oriented counterpart to CoWoS, which is used for AI accelerators. So we have $1 billion of chips that are sitting there with Taiwan Semiconductor that they can't do anything with until they get the memory. It's saying right here that the design means that packaging cannot be completed without the corresponding memory, even if the processor wafers are available. The report estimates that TSMC is holding around $1 billion worth of Apple processors awaiting DRAM delivery before they can move to the next production stage. The other area that I thought was interesting, the last part, it just shows that that the reported bottleneck or the constraint that we see in the market is so strong, it's beginning to affect a flagship company like Apple and their consumer devices. And in the old days, just getting access to TSMC's capacity was enough. But now it's not only TSMC, you have to make sure that you have guaranteed supply of memory, that you can have a smooth launch with your new products in the marketplace. So that just shows us the amount of constraint that we see in the market. So one quick story, and then I'll give you two events. This was an interesting one. I'll go real quickly, but it looks like Tesla now is looking to hire a new memory engineer as they look to try to solve some of the market challenge with their Terafab. So it says Terafab targets AI memory bottleneck with DRAM talent push. So Musk looks like he'll be moving to address one of the AI industry's biggest constraints, its memory supply at Terafab. They began recruiting for a position called the Memory Process Integration Engineer. So any of you guys out in the community that want a job and it sounds interesting, they're looking for talent right now. You may be the right one for that job. The focus on end-to-end DRAM, the position will focus on end-to-end DRAM process integration, advanced, sub 2 nanometer DRAM node development, memory cell optimization, and collaboration across manufacturing and circuit design teams. It will also support the development of emerging technologies like MRAM, RRAM, and 3D DRAM. So obviously it shows us that Terafab is expanding beyond the AI logic chips and stepping into an advanced memory manufacturing, a strategic push that could intensify competition in a market long dominated by Samsung, SK Hynix, and Micron. Now, will it intensify competition? I don't think in the short term, but it clearly shows us a sign in the market that things are getting to be so difficult and so constrained with this sector that you're seeing companies hire new talent and start to decide that they're going to do it in-house. Let me give you the two catalyst things to look for next week, and then we'll wrap up the video. Guys, we have two big investor days next week. Micron and SanDisk. Mark them on your calendar. They're going to be must watches. I'll cover them on the channel as well and make sure we talk about all of the kind of announcements, everything that comes from these investor presentations. But this one for Micron is August 10th at 8 a.m. Mountain Time. It's a KeyBank Capital Markets Technology Leadership Forum. So I'll cover it on the channel, but mark it down August 10th next week. And then August 13th, we see SanDisk Investor Day. I would expect to hear more about high bandwidth flash here and other new exciting products from SanDisk. So those are two big catalyst events that we have to cover as a channel next week overall. But lots of great things happening this week. And I would say in closing, as I always say on the channel, is do not let the noise distract you. We have a ton of short-term post-earnings noise and headline noise in the marketplace right now, but do not let it distract you from the multi-year structural supercycle that we see right now in the long-term arrangement and commitments that these companies are signing. The physical memory bottleneck, based on those signals I just showed you, is as constrained as ever. The sector is concrete right now. It is strongly and firmly intact. Just like the Citi report said from their analysts, the memory upcycle right now is in the early innings. So if you guys got value out of this deep dive tonight, if you like this content, make sure you hit the like button. Make sure you subscribe to the channel and drop a comment below. Let me know your thoughts that you took away from today or what you took away from the video. And I'll see you guys in the next one. Take care.